Ever wondered why some people seem to have it all figured out financially in their 20s, while others seem to struggle? It's no secret that the choices we make in our 20s can set the tone for the rest of our lives. And this is particularly true when it comes to finance. The financial habits we develop during this critical decade can either propel us towards a future of financial freedom or lead us down a path of financial folly. In this video, we'll be exploring the top 10 financial mistakes that people often make in their 20s. Kicking off our list at number 10, ignoring the importance of budgeting. This is a common blunder, especially among those experiencing financial independence for the first time. Budgeting can seem tedious and restrictive, yet it's the cornerstone of good financial health. Without a budget, it's like setting sail in the vast ocean without a map. You might enjoy the freedom initially, but soon you'll find yourself lost amidst the waves of bills, overdrafts, and unexpected expenses. A budget is your financial blueprint. It helps you see where your money is going, enabling you to make conscious decisions about spending, saving, and investing. It's not about limiting your freedom, but about giving you control. Overspending, financial stress, living paycheck to paycheck, these are all symptoms of a lack of budgeting. But the good news, they can all be avoided with a bit of planning and discipline. Remember, you can't manage what you don't measure. At number 9, we have neglecting an emergency fund. Imagine a rainy day without an umbrella. That's exactly what life is like without an emergency fund. It's a financial buffer that shields you from unexpected expenses, such as car repairs, medical bills, or sudden job loss. An emergency fund is your safety net, allowing you to weather financial storms without sinking into debt. Think about it like this. It's an investment in your peace of mind. When you've got a cushion of cash to fall back on, you're less likely to panic when life throws a curveball your way. So, how much should you save? A good rule of thumb is to have 3 to 6 months' worth of living expenses tucked away. Remember, emergency funds aren't about getting rich. They're about staying afloat in tough times. So start saving today, because when it comes to financial security, every penny counts. An emergency fund is not a luxury, but a necessity. Coming in at number 8, misusing credit cards. Now, credit cards can be a fantastic tool for building credit and earning rewards, but they can also be a slippery slope when not used responsibly. It's all too easy to see a credit card as free money and start spending beyond your means, but remember that money is borrowed and has to be paid back, often with hefty interest. The pitfalls of credit card debt are vast. Not only can it lead to a cycle of debt that's hard to escape, but it can also negatively impact your credit score, making future financial goals harder to achieve. It's crucial to understand the terms of your credit card and pay your balance in full each month to avoid these problems. Even if you're in a bind, remember, credit cards are not an emergency fund. They're a tool, not a crutch. Use them wisely and they can be a great asset in your financial journey. Mistake number 7, not investing early. Picture a snowball rolling down a hill. As it continues its journey, it picks up more snow, growing larger and faster. This is the concept of compound interest, a powerful tool in the world of investing. When you invest, your money earns interest. Over time, that interest also earns interest, leading to exponential growth. Starting to invest early gives your money more time to grow, just like that snowball. Consider this. If you start investing at 25 instead of 35, even if you invest less money overall, you could still end up with more wealth by the time you're 65. Why? Compound interest. It's like magic, but it's real. It's about time and patience. It's about letting your money work for you. The best time to start investing was yesterday. The next best time is now. Halfway through our list at number 6, we have living beyond your means. Now, what does this really mean? It's the classic tale of lifestyle inflation, where your expenses increase as your income grows. Imagine earning a hefty paycheck but having nothing left at the end of the month. Sounds familiar? It's because we're often tempted to upgrade our lifestyles, from getting the latest gadgets to dining at fancy restaurants every time we get a raise. But this is where the danger lies. Living beyond your means can lead to debt, stress, and zero savings for the future. So it's crucial to resist this temptation and instead focus on living within your means. Remember, this doesn't mean compromising on your quality of life, but rather making smart financial decisions that ensure your income exceeds your expenses. Living below your means doesn't mean living without fun. It means living without financial stress. Mistake number 5, not saving for retirement. Yes, you heard it right. It might seem like retirement is a lifetime away, especially when you're navigating the thrilling twists and turns of your 20s. But let's have a reality check. The earlier you start saving for retirement, the better off you'll be. Think about it. Every pound you put aside today has the potential to grow exponentially over time, thanks to the magic of compound interest. It's like planting a seed and watching it sprout into a mighty oak. And no, you don't need a massive income to start. Even a small amount saved consistently over time can amount to a substantial nest egg. Remember, it's not about how much you earn, but how much you save and invest. Here's a thought to chew on. Retirement isn't an age, it's a financial status. So start saving now and give yourself the gift of financial freedom in the future. Retirement may seem far off in your 20s, but it's closer than you think. At number 4, we have not having financial goals. Imagine you're setting off on a journey without a destination in mind. Sounds a bit aimless, doesn't it? That's exactly what happens when you don't establish financial goals. These goals serve as your financial compass, providing direction and motivation to keep you on track. They could range from short-term objectives like saving for a vacation to long-term targets like buying a house or preparing for retirement. Financial goals give your money a purpose. They also help you prioritize your spending and stay focused. This way, you're less likely to make impulsive purchases that could derail your financial stability. Remember, your goals should be smart, specific, measurable, achievable, relevant, and time-bound. This approach helps to break down your larger goals into manageable steps, making them less daunting and more achievable. So start setting those financial goals today and give your money a clear direction. After all, a goal without a plan is just a wish. Coming in at number 3, not understanding student loans. Student loans, the necessary evil for many seeking higher education. But here's the catch. They're not free money. It's a common misconception that can trap young adults in a cycle of debt for years, even decades. When you sign on that dotted line, you're committing to repay the amount you borrow, plus interest. And this interest can really add up over time. So before you take out a student loan, it's crucial to understand the terms. What's the interest rate? How long is the repayment period? What happens if you miss a payment? It's also worth exploring other financial aid options, such as scholarships, grants, or work-study programs, which don't need to be repaid. Remember, the decisions you make about student loans today can have a long-term impact on your financial health. Student loans aren't free money. They're a debt that needs to be repaid. Mistake number 2, neglecting insurance. Now let's talk about something that many young adults tend to overlook: insurance. You might think, I'm healthy, I'm careful, why do I need insurance? Well, life is unpredictable and full of surprises, not all of them pleasant. That's where insurance comes in. It's not just a piece of paper or a monthly expense, it's a safety net. Insurance, be it health, car, or home, is essentially a tool for financial protection. It safeguards your finances by covering large, unexpected costs that could otherwise leave you in financial ruin. It's a way to mitigate risk, to protect yourself from the financial impact of unforeseen events. Let's face it, no one plans to get sick or have an accident, but these things happen. And when they do, having insurance can be the difference between a minor setback and a financial catastrophe. Remember, insurance isn't about fear, it's about peace of mind. And finally, the biggest mistake of all at number 1, not learning about personal finance. It's not a topic that's typically taught in schools, yet it's a fundamental life skill that we need to navigate the financial challenges of adulthood. Without understanding the basics of personal finance, we're often left navigating a complex financial world blindfolded. Imagine trying to build a house without understanding the basics of architecture. Would you trust the stability of that house? The same principle applies to your financial life. Financial literacy empowers you to make informed decisions about your money. It allows you to understand how money works, how to earn it, manage it, invest it, and ultimately how to make it work for you. It's about comprehending budgeting, understanding interest rates, recognizing the importance of saving and investing, and being aware of financial risks and opportunities. Knowledge is power, especially when it comes to your finances. So there you have it, the top 10 financial mistakes people make in their 20s. From ignoring the importance of budgeting to not understanding the implications of student loans. We've covered each pitfall in depth, highlighting not just the problems but also the solutions. It's important to remember that your 20s are a crucial period to set the financial tone for the rest of your life. Avoiding these common mistakes can pave the way to financial freedom and security. And remember, knowledge is power. The more you know about personal finance, the better equipped you'll be to navigate the financial seas of life. If you found this video helpful, do click that thumbs up button. Thanks for watching. Like, subscribe, and share if you found this video helpful. Until next time, stay financially savvy.